Hello everyone, I welcome you all on EduTap, and today we are going to understand a very important scheme for especially for RBI. It's quite near, and see, this scheme has been recently been revamped, and the new whatever be the new changes that will be applicable from 1st of April 2023. That is why it becomes very important from the examination point of view. There are 99.9% chances that this scheme is going to be asked either in phase 1 of RBI or in phase 2 of RBI. Very high chances, and that is why we are going to cover it in a very comprehensive manner. Okay, but before starting the session, here's an announcement for all the aspirants who are preparing for central regulatory bodies. We have come up with one-stop solution guide for all the queries that you might be having regarding the organization you would want to join. For example, if you want to know about RBI, NABARD, SEBI, what are its function, how does it contribute to India's economy, everything you are going to find in these books. Along with that, what are the different departments, what will be your role once you join the organization, everything are being present in this. Not only that, but after once you have understood about the organization, so next is about the recruitment process, right? So what are the different phases, what is the pattern of different phase, what sort of questions are asked, what is the syllabus, what is the previous year pattern, and the cutoffs, which are very important to know. Everything has been mentioned here, and you can get these e-guidebooks free of cost from the link that is provided in the description box below. So do not miss the opportunity. All right, so now let's start with today's scheme and why we are actually doing it. Because if we look at the ESI section, the economic and social issues section, here it has been talked about improvisation of the industries, right? Focusing on the industrial sector of India, industrial development. And when we talk about micro, small and medium enterprises, they are, you can say, for now they are contributing somewhere around 30% in India's GDP, and they are playing a very crucial role, right? So that is why it is part of your syllabus. It is a very important scheme, recently launched. 100% can't give 100% guarantee, but 99% it can be asked in your examination. Here is the snippet from the PIB itself, which says revamping of credit guarantee scheme for micro and small enterprises is in effect from 1st of April 2023. Okay, very important scheme. Now let's understand some of the basics, because see, once you understand the basics of it, you will get the gist of whatever the scheme is about, and it will be easier for you to understand the scheme, to memorize the data, and also even to have pretty much good guesses in the examination, right? First of all, we have to understand that here the government is talking about guaranteeing the credit. Okay, credit is something like for the loan, for the money that you get. Okay, so it is talking about guaranteeing. So it is guaranteeing whom? It is guaranteeing the micro and small enterprises that we are going to back up with the credit facility to you. Okay, what does it mean? First of all, see, there are three types of enterprises we have in India: micro, small and medium, and we have categorized these on the basis of how much turnover they have and how much equipment approx they have. So for micro enterprises, the criteria is if any enterprise has investment in plant and machinery or any equipment that are used in the industry, not more than 1 crore. In such cases, that will be considered as micro enterprises. And there is one more important point to it, that their annual turnover should not be more than 5 crore. So if any investment is still 1 crore of machinery, plant and equipments, under 1 crore, and the turnover is under 5 crore, then they are categorized as micro enterprises. For small, the investment is not more than 10 crore, means under 10 crore should be the investment, and annual turnover should be not more than 50 crore. So such enterprises will be considered as small enterprises. And medium are the one where the investment of in plant and machinery and equipment, it is not more than 50 crore, means under 50 crore, and turnover is 250 crore. Okay, so if we look at the scheme, so this talks about guaranteeing the credit, the finance, only to the micro and small enterprises. First thing you have to keep in mind, this scheme, it is not for medium enterprises, it is only for micro and small enterprises. And why is it so? See, basically when we are talking about micro and small enterprises, of course we can see that the business that they are doing, they might be getting profit up to their level, but it's not that a very grand enterprise they have or business they are doing, right? And usually, especially in the case of micro enterprises, it has been observed that the people who are running their micro enterprises, they do not have that much money, or the assets, they do not have any asset, they do not have on the behalf of which they can claim any loan, right? So for any business you would require more money than you require, right, to expand a business, to run a new business. For that, if you want to take loan from the bank, you have to give some asset as a security, right? But such micro enterprises especially, and some of the small enterprises, they do not have those assets available to them. Because of that, they cannot take loan to expand their business or maybe even to establish their business. Now the government said that no issues, government gave the security to bank, okay, that you provide loan to small and micro and small enterprises, and on their behalf we are taking the guarantee that if they are not able to pay the loan, we will pay you, not all amount, whatever are the conditions we are going to look at in today's session, but government then guarantees on the behalf of micro and small enterprises. And for this reason, what the government of India has done, they have, along with SEBI, they have made one trust, okay, and that is known as your Credit Guarantee Trust for Micro and Small Enterprises. Okay, so this is the logo of them, a colorful bird. Okay, so Credit Guarantee Trust was formed, okay, for micro small enterprises, where the government plus SIDBI, what they do, they have kept some money in there. So that is to give guarantee to the banks so that they can provide loan to the micro and small enterprises only, not the medium one. First difference that you have to understand. Okay, now let's look at the launch of this particular scheme. So because see, this is a revamped version, that is why we will call it 2023, and there are a lot of changes that have been done, changes in percentage, rate of interest, and how much money exposure will be given, all these things. So it kind of, you can say there's a lot of revamping that has been done, and that is why the launch year we will consider it to be 2023. Okay, and it falls under the Ministry of MSME, quite easier to understand. Okay, objective kya hai? So basically the objective is to support, we have to support our micro and small enterprises who do not have either any guarantee as a collateral, as a fees, as a loan, as a asset, you can say, or the whatever asset they have, they are not sufficient to back up the loan, or against which they can take the loan, okay, or the third party guarantee. So in such cases, to expand the MSE or the micro small enterprises, the government, they have come up with the particular scheme. Okay, and eligibility is what you should be, you're having a micro or small enterprises. It can be greenfield, means you are establishing a new one. It can be the brownfield, where you want expansion, means you already have established your enterprise, but now you want to expand it. That is fine, but it should be micro and small enterprise. First thing is this. Now let's understand the key features. What are the important key features? First of all, when we are talking about that the government, this particular scheme will back up micro and small enterprises for loaning purpose. So what sort of loan are we talking about? We are talking about all cash based or the non cash based loan, where we are talking about certificate of guarantee and all these things that are given by the banks, right? So all funds and non based facilities given to borrower are covered under the particular scheme. First of all, you have to keep this. Actually, till last year it was how much? It was 2 crore. So government was providing loan exposure up to 2 crore in case of manufacturing sector, okay, and in fact for trading and service sector, in that case even they were providing just 1 crore. But from 1st of April 2023, be it trading sector, manufacturing sector, service sector, for any, the maximum of 5 crore of loan exposure is can be booked under the particular scheme. Or why, wherever you will see T, no, it means trust, okay, because trust only will be providing with the money. Okay, now what does it mean? Will the government give all the 5 crore to the bank? No, it does not mean. It means loan exposure. We need to understand if the government is going to give back 100% or is guaranteeing 100% of the loan taken by micro and small enterprises, bank will become lenient. Bank will provide loan to anybody because they have the security that 100% of loan will be given by the government of India, right? And also the micro and small enterprises will take infinite amount of money if the government will cover 100% of the loan, right? That is why there's an upper limit, means if the government, if the any micro small industry is taking loan up to 5 crore, government will back up some amount of it, but if they are taking more than it, then the government will not back up. I hope you understand this. Okay, till 5 crore the government will back up. Above that it will be unsecured loan. Okay, that bank will have to see that if they are willing to take the risk to give the loan to the borrower or not, that this particular money, the 5 crore maximum that the backup will be provided, it is still not applicable for the small finance bank or urban cooperative banks. There it is still the maximum capacity is 2 crore. What does it mean? If I am a borrower, I want to take loan from small finance bank even after 1st April 2023, I will get loan only up to 2 crore. Means I can get more, but government will back up to 2 crore only. Or even if for urban cooperative bank, it is up to 2 crore. But if I am going to SBI, PNB, right, in that cases I can get up to maximum 5 crore. I hope first understand for first difference you have understood. Second is revised coverage, I'm sorry, this should be C, is applicable for trading as well, as we have discussed before, right? Because initially previously it was just 1 crore in case of trading, but now it is the revised coverage, that is of 5 crore. It is applicable also for the for trading as well. Okay, first of all I hope you understand these are the new changes that have been done. This was initially that existed, so no change has been made in this, but it is an important key feature of this particular scheme. Now there are two sorts of model. Okay, one is single model and another is hybrid model. What is the difference? In single model there is no collateral that is being provided by the MSE. Okay, so here they are not providing with any collateral, but in hybrid model some asset is provided by MSE. So some asset MSE give as collateral, and for the rest of the loan that has been taken, minus whatever the value of asset will be, that will be backed up by the government. Now what's the use of this hybrid model? Because see, if you are providing with some asset, even the government, not government, sorry, even the bank will have some security that okay, it would be easier to recover loan in case of the person is not able to pay back the money, right? So we have two models, single also, hybrid also. Those are you can opt for both. Okay, but in hybrid model there are higher chances of getting the loan because you are providing with some assets as well. Okay, that's the only difference. Now what is the percentage guarantee cover? I told you, right, that government cannot give 100% because it will make banks also lenient for providing the loan. They will not search for if the loan are worth giving or not, and even the people are going to get whatever amount of loan they want, right? So what is the percentage guarantee the government will give? First of all we have to understand that this is only for micro and small enterprises. Now depending on who is running it, right, on that basis the percentage will be given. For example, if MSE, any micro small enterprise is taking loan up to 5 lakh of exposure means they have taken 5 lakh. So in that case, up to 5 lakh, 85% will be backed up by the government. Rest 25 will be unsecured only, right? That is the bank have to take the risk. And now in this case only bank will do the proper scrutiny that is it actually worth it giving the loan or not. So that is why only 85% will be given to MSE up to 5 lakh exposure. Okay, next is if the MSE is run by any women entrepreneur, SC, ST, a person with disability, Z certified. What is Z? It is your zero effect, zero defect, right? So this is the aim of the government to produce such products which have zero defect, they are good in quality and zero effect on the environment. This is in itself a very separate scheme where you get certification for your products that will give you more exposure to sell it into the market if you have this certificate. That's a different scheme. But if you have that Z certificate also, then also you will get 85%. Now you are looking at two words I have written, aspirational districts. See, I have written it red because this has been included in this revamped version. Now you may feel that because this has been red, this has been eliminated, but sorry, no other color was suiting it where you can actually read it. That is why I have added these color, which is this color, red color, but these has been added in your revamped version, and I've made that in red color so that you know the difference. If the question asks that which of the following has been added in this revamped version, you should know the answer, that is Agniveer and aspirational districts. Who are Agniveer? So Agniveer we have already made a particular separate scheme. You can watch from the playlist. Agniveers are this new scheme has been launched where the youth of India, they can be part of army or the defense forces for 4 years, and after that they can come back to the civilian world, and that is why for them also 85% of the loan will be backed up by the government so that they can start with some new enterprise. Okay, and aspirational districts are the such districts which require more attention than the other districts in the state. Okay, so for them 85% loan will be backed up by the government. Now here's one more catch for this second point, that further they get 10% discount on fee as well. See, basically what happens, the government is actually backing up so much loan, and they are also providing this assurance to bank also, right? That ultimately bank want business and bank want to make profit, right? How will they make profit? When they'll give loan, right? So it's benefit for them also if they are paying loan and if they're getting back, right? So what the government what this particular scheme says, this particular scheme, it actually demands some annual fees also. Well, they demand from the bank, but the bank, they get it from the borrower only, right? So ultimately borrower has to pay, but the government is not directly asking from the borrower. They'll ask from the bank that we need some annual guarantee fee because we are providing you with this facility. Okay, so such second category people who belong to the second point, they will even get 10% discount on the fee that will be charged by the bank. What is the rate, we'll look in the next slide, but such people will get 10% discount on the fee as well. Okay, I hope till now it is clear. If there is any doubt, please let me know in the comment section. Next, if you belong to northeast region, Jammu Kashmir, Ladakh, including Ladakh as well, then and if you have taken loan up to 50 lakh, we know 5 crore is the limit, right? If you have taken loan up to 50 lakh, in that case 80% is the amount that will be backed up by the government. Okay, and they will also get 10% discount on the fee, whatever be the fee that will be charged, and this fee will be depending on how much loan you have taken. Okay, on that basis, on that ratio, the fees depend. Now we are saying that up to only 5 lakh only, okay, and up to only 50 lakh only, and this is a special category where 85 will be given. What is for the rest of them? What if any MSE has taken loan more than 5 lakh, or if in northeast region any loan has been taken up more than like 55 lakh, in such cases what will be the condition, right? In such cases, in all the other cases, the government will back only the 75% of the loan that is taken. Okay, I hope this is pretty much clear. I have made revision here also, and very clearly, I hope very clearly I am explaining this to you. Next key features we have. Now this is the key feature now that we will discuss, that is, these are for banks. Okay, so you can just have an idea, even if you skip, I don't think there will be much issue, but let's just understand. You just understand here, you need not to revise afterwards. Okay, guarantee by the government will start from the date of payment of guarantee fee. Since the day guarantee fee has been given, because we have just talked about that annual fee has to be submitted, right? Annual guarantee fee. So as soon as that is submitted, guarantee starts from the government side, from that particular end. Okay, now for how much time the guarantee will be there? So there are two types of loan, for the term loan and working capital loan. Okay, term loan is for longer period. For example, you want to buy some machinery, because such cases the loan will be that very much, right? You can't just pay in it within just a few years. For that you have to you pay for the longer duration of time. So for term loan, guarantee is given till the tenure of the term loan, and for the working capital, the day-to-day work that you for that you need loan, right? It is given for, can be renewed for the further period of time. Okay, and this renewal will depend on the payment of fees, if you are paying the guarantee fees or not. Okay, on that basis it can be renewed for further time period. Now we talked about annual guarantee fee, that should be there. So initially it was somewhere around on an average 1.50, but now it has been reduced, and the range is 0.37% to 1.35%. This is the range, again depending on how much loan you have taken. Okay, I don't think individually you have to go down, but if you want to read about the individual data also, you can find it on internet, but the range you should at least remember, because this was present in your PIB. When we'll again read the news, you will understand. Okay, so annual guarantee fee, it ranges from 0.37% to 1.35%, which has been reduced from the initial fees that used to be taken by the government. Okay, and one more thing you have to understand. See, this is the fee that the government is charging from the bank, but bank is also providing service to you. Okay, so bank will also charge its own fees as well. So whatever fees that will be there, it will be added to this one, and then every range is 0.37% to 1.35% maximum. Okay, maximum rate of interest. See, initially, now see, there is no provision that has been mentioned about rate of interest in the revamped version. So if nothing is present, clearly it means that it depends on banks and NBFCs, your non-banking financial companies. It depends on them how much you want to charge. But in the previous one, it was written 14% for the banks, that maximum they can charge loan interest up to 14%, and NBFC can charge maximum to 18%. Now why have I added? Because there was no mention in revamp, because there is no clarity yet that Is it depending on the banks only, or will the government they come up with the clarification that the previous norms will only be applicable? Okay, that is why I've added it. But currently in the revamped version there is no mention of the maximum rate of interest that can be charged. Okay, now two last very important factor that are being left, and okay, so there are many, so there's another slide as well. Lock-in period is 18 months. What does it mean? This is again, it is for banks. Okay, this slide is for banks again. Lock-in period is 18 months. What does it mean? Till 18 months the bank cannot just approach the government to claim the money. Okay, so lock-in period is 18 months, means till then it can, lender is responsible for all recovery efforts. What does it mean? Now here government is not that easy breezy that we are expecting it to be. Is there some problem? Is there internet problem? uh, I think it's fine now. I for a bit I think my video was stuck. Right. So let's continue. Okay. So here what the government is saying, that lender, who is the lender? Of course, banks and NBFC we are talking about, right? First they have to make full efforts to recover the money from the person itself. Okay, from the borrower itself. It's not like that the borrower will say I don't have money and government will come and happily they'll submit the money. It will be properly checked that if the lender has done proper scrutiny or not, have they have tried to recover or not, and then only government will provide with the money. Okay, so it's lender's responsibility, the banks and NBFC's responsibility to have full recovery efforts. Then this particular trust shall pay 75. Now what happens, right? It's not okay, so the bank has made the efforts. Okay, now it's not like that the bank will go to the government that we have made the efforts but still it cannot be done, now pay us the money. It's not like that. There is a proper legal procedure that goes on. So what happens, that in that legal procedure, once the bank first file the legal procedure, they just file for it, that okay, a legal proceeding will happen. So once they file, just after that the trust will provide 75% of the guaranteed amount. Now here I want to request you to please do not confuse it with the backup the government was providing. What does it mean? It means that, for example, 5 crore was the maximum amount that has been taken, so 75% will be backed up by the government. So it is 35 crore, 75 lakhs that will be backed up by the government. Now in itself it is 100%. You have to understand, now it is itself in 100%. And now when the legal proceeding will happen, the trust will provide only 75% of it initially once the filing is done. Okay, 75% of the guaranteed amount which the government has guaranteed, that will pay you upfront. Okay, and 25% on conclusion of the recovering proceeding. When all the recovery conclusion, all this legal proceeding will conclude, after that this 25% of this particular amount will be given to the bank. Okay, I hope there's no confusion. It's very simple to understand. Okay, and also one thing, that this particular trust, it will cover only the outstanding whatever amount was left, and only 1/4 of interest and nothing else. Why? Because for NPA 90 days are required to become an NPA, to become any NPA non-performing asset, right? 90 days are minimum are required. So and 1/4 consists of 3 months, right? So that is why this particular trust will cover only the outstanding that was left, and only the 1/4 interest will provide by the trust. Okay, so these were the things that were for bank. Again I'll say, just give you a brief idea about this. Now you can you can, if you want to remember, you can, but this is the basic things and only the important ones that I have added. Okay, now there are last two important features. Now see, we have understood that this legal proceeding and everything will happen, right? But government, what they have done, they have said that okay, legal proceedings are very long and they are tiring, and it's very time taking, all these things, right? So government have said that the bank, the lender, can claim the money that that the borrower has taken and the government has backed up without any legal action. So we have understood, for legal action 75% was given, right? And once they have lodged the complaint, and after that in the conclusion 25% will be given, right? So you have to first make a proper legal procedure, then only you are going to get the money. If you have not done any legal procedure, the government will not going to give you money. But they have said that for the small amount, okay, for the smaller amount, means for up to 10 lakh, if there is NPA, or if there is NPA till 10 lakh, then there is, without any legal action, the government, the lender can claim the money from the government. Okay, I hope you understand. Initially this amount was 5 lakh. What does it mean? We have understood that first the lender has to file a legal complaint, a legal procedure has to be made, so that and then only the government first pays 75 and then 25% of the guaranteed amount, right? But if you have if the loan that has been taken was up to 10 lakh, which was initially 5 lakh, the maximum amount was 5 lakh, and in this revamped version it is 10 lakh. In that case, without any legal action also, the lender can claim the money from the trust. And of course, but they would have to show that they have tried their best and they have recovered this much and this much is left, so everything they would have to show. But here the money can be can get even without any legal actions. Okay. Last thing is new coverage and structure. See, we have understood whatever be the changes that are there. We have done the comparison also. Shall be applicable for all new loans. So whatever are the new loans, okay, that now will be filed under those loans, the new structure is applicable, or after 1st April. And for already learning loans for traders, मैं तुमको बताती हूँ what this particular line is all about. I will tell you. Okay, first we have to understand this. Initially we have looked in the previous version, for the manufacturing sector the amount was 2 crore. For trading service the amount was 1 crore, right? But new structure says what? The new structure says that it is 5 crore for everyone, right? For everyone, we have understood. So the new structure, and there are some changes in percentage also, annual fees also, right, backup also, everything we have understood. So this new structure, it is applicable for all the new loans. Okay, and for the previous one, so who have already taken loan, they can again take loan under the scheme, it has been mentioned. Okay, but for the ones who have already taken the loan, only for the traders, this new structure and this coverage is applicable. If you belong to manufacturing sector or service sector or the rest that are under it, okay, they can claim up to this 2 crore only, and they will be eligible only for the whatever be the norms that were in the previous category only. What does it mean? That the previous people who have already taken the loan, they can again claim the loan, they can again take the loan, take the benefit of this particular scheme. But only the traders, only who are the traders, they will be charged according to the new norms. And if you are manufacturer, if you are in the service sector, any of that, in that case you will be charged the previous norms only, according to the previous norms only. Okay, I hope that is pretty much clear. And this was all about the scheme. Now we'll again look at the this particular news for better understanding. So see, this paragraph, it talks about what was expected in the session, but now what are the changes that have been done. And because these are the things that are mentioned in your news, so you have to be very thorough with it. The corpus of credit, so see, some more amount has been infused so that more people can be benefited, because if we have increased the limit from 2 crore to 5 crore, of course more amount has to be submitted in the fund itself, right? So how much more amount has been infused? So rupees 8,000 crore has been infused. Okay, first thing is this. Second is here we have to look at, it has been reduced, right? The percentage, it has been reduced 0.37% reduce हो गया. देखो, for 1 crore initially it was peak of 2%, now they have reduced to 0.37%. okay, and the range we have also seen 0.37% से कितना हो गया, 1.35%, depending on how much amount that you have taken. Okay, then the limit of ceiling from 2 crore it has increased to 5 crore, that we have seen. And settlement of claim, initially it was 10 lakh rupees without any legal action, है ना, and initially it was how much? It was 5 crore. Okay, so this was the scheme and the news, very important from the examination RBI point of view. Now this is the homework for you all. Okay, do attempt it. And these are the toppers of the last session. Impana said the right answer, Millie said rest of the right answer, but here see, I can understand it was not specified clearly when I took the session. However, later on I modified the language. The maximum limit was not how much you will get, but how much you have to pay. But I can understand the question was vague, so it is I who is at fault. Raki said the right answer, again with the same thing, same confusion. I'm sorry, because it was not clearly written, so you got confused. Rishabh said the right answer. And here the question that you have asked, see, this 15 to 30 lakh has been increased for the senior citizen scheme, that is separate under the small savings schemes that we have seen. So this is all together the hike that you have noticed, it is another separate scheme which comes under small saving schemes. If you have not watched the video, I have made a session on this as well, you can watch it, okay. But this is not the same scheme that we are talking about, okay. Then Sharmila, uh, th- uh, Sharmila, I have taken your suggestion, but usually for revision purpose, when examination will be near, I will come up with some sessions. But currently, let's focus on one scheme at a time, and wherever they will be required, I'll definitely come with it. But I've taken your feedback, and I'll work on that. And Rainbow, I've said the right answer, and thank you so much. And these words really mean a lot to me. And then Rahul, I've taken the suggestion. VTC, currently I can't start with ministry wise. There's a reason for it, because in ministry wise there are some schemes which are not in news currently, and there are some schemes which are usually not that much in news, but they have been in recent months, and those becomes more important from the examination point of view. That is why currently I cannot start with it. But yes, for reform linked distribution scheme, I've taken your suggestion. I'll work on that. And thank you everyone for watching the video. If you have any doubt, any query, you can always write to us. And please like, subscribe to our channel if you like the video, and you can also join our Telegram channel to get the PDF of this and every lecture that we provide here on YouTube, okay. And Gopi, currently we don't have for ADA, there's no guidebook for ADA currently. I'm so sorry for that. Rani, good afternoon. Anupam, and then I did my graduation, so I want to ask you, Anupam, most probably you are eligible for the grade B. Most probably, what you can do, you are looking at this mail, right? hello@edutab.co.in. This mail you are looking at. Kindly drop us a mail here, and our team will definitely reply to it. I cannot be 100% sure about it. I most probably you are eligible, but then again, I cannot give you my 100% words. I myself am not confirmed about it, but you'll, if you'll add you'll mail it here, you will definitely get a reply. So that is all. I think there's no any questions yet, so we'll come again with another scheme which is in news and important from the examination point of view. Until then, all the very best for your examination, and thank you. And you can always suggest the